Welcome back, folks. Dow's down 598. You get the NASDAQ off 207. S&P's off 55. Let's go over to our man, Mr. Steve Rhodes. And don't forget, folks, every trading day, Steve does a great show right here, 12 to 1 Eastern 1 to 2 Eastern Standard Time. Also has a great newsletter, Mastering Probability. Now, very easy to get Steve's newsletter. You come over to our website at TFNN. You're going to go into newsletters. You hit Mastering Probability. It's right in the center. You can get Mastering Probability for 1 month for $149. You can get it for 6 months for $695, which is a savings of $199, 22%. You can get this for a year for $1195, which is a savings of $593, or 33%. Steve Rhodes, what's going on?
There are several consolidations of important instruments in the market. You were mentioning the U.S. dollar, and bonds have been in a consolidation. I think gold as well. Gold's consolidation looks slightly different than the U.S. dollar and Treasury bonds, but at some point in time, these things are going to crack out here. So what I thought that we could do, Tom, is for the folks out there is just kind of take a look at the general markets overall. As you know, many weeks ago, I was with you doing your segment and showing folks about the relationship between the markets and GDP, the markets and unemployment,
yes,
and all that, suggesting to me that we're going to go back and we're going to crush the, at least with regard to the Dow. In the Russell 2000, we're going to go retest those lows in March, likely bust through them. But whether we do or not at this stage here, let's just start with understanding how market tops actually form. So it's very pertinent to today because of really yesterday afternoon's activity from about 3 or 3:30 on, the selling that was in there. So if we take a look at stock markets, folks, they don't always top at the same time. Many people think that they do. So, for example, if we go back into 2007, what we will find is that the Russell 2000 topped on July 13th, 2007. But it took until October 9th for the S&P and the Dow. That meant that the July high inside the Russell, never got above that, even while the Dow and the S&P were able to do that. Oh, I thought my screen was shared. Shoot. Sorry about that, Tom. That makes it a little bit easier if you can actually see the screen. That makes it a little bit easier. So, folks, here's what we're looking at right here. So what you'll see now, I'm just using closing prices here.
Yeah.
So which is a little bit easier for us to see on these line charts. So what you'll see here is the Russell topped in July of 2007, followed by the S&P and Dow, which topped on October 9th, again on a closing basis. And then we had that final closing high inside the NDX 100. So again, not topping at all the same time. If we fast forward to some more recent times, for example, the high in 2018, in this case here, actually started with the NDX 100. It topped on August 29th, followed by the Russell 2000, which was August 31st of 2018. I guess that was actually that was the second one at the top. And then the S&P on September 20th, and then finally the Dow was the last one to top on October 3rd. If we take a look at the 2020 tops out here, we can see that the Russell 2000 topped on January 16th, followed by the Dow, which was nearly a month later, February 12th. And then the S&P and the NDX 100 were the final ones to top on February the 19th. Now we take a look at where we're at today, the 2020 counter trend patterns, and they're now complete. They completed on yesterday, and I'll go through and show folks the reason why I say that, because so what we had out here was on April 29th, we had the Dow, the S&P, and the NDX 100, and the Russell 2000 each make their highest closing high in this counter trend rally. It wasn't until yesterday, May 11th, when the NDX 100 did. Now, when I use the word top, folks, what I'm really referring to are completed sell signal patterns. So let's go explore those patterns out here. And here we take a look at the S&P 500. What it has is a confirmed Gartley sell pattern. Now, Tom, this green line that you see going across my screen out here, 29.85.93,
yes,
that is what I refer to as breakdown resistance. And how I establish that is I'm looking for, I'm using the Tom DeMark's TD9 system out here, which is taking a look at each candle and comparing it to the candle 4 bars prior, or four candles earlier. And it's comparing the closes of each of those candles. So in this case here, and it takes a lot of energy to have 9 consecutive closes, where in this case here, moving down, where each close was below the close 4 bars earlier. What that does is that helps me to establish a breakdown level. So this Gartley sell pattern formed prior to getting to that breakdown level. And today, what we have is we have price closing below another green line of mine. This one more squiggly out here. I refer to that as Stevie's green line or red line, but it's the oscillator and change line. And what this helps us understand is whether it's just a normal pullback. A pullback is just a retracement to support, because this line will act as support or resistance or something more important than that. So in the S&P 500, I also happen to have a breakout level. So we talked about the breakdown area, and that was at 2985. The S&P 500 should target the 2574 level. That was the last place where price had broken out using that TD9 count. 2766, though, is another area that we want to pay attention to in the ES Mini, and that happens to be the bottom of its monthly profile. And if you go back and you take a look at profile levels, if we get 2 closes below the bottom of a profile, that will indicate a change in trend for us. If we go take a look at other patterns in the marketplace, the Dow, that confirmed a Gartley sell pattern. Folks can see that was also below its breakdown level of 25,994. Now, unlike the S&P 500 that had a breakout area, the Dow doesn't. And so with price trading below my red line level, which was around 23,683 about an hour or two ago, as long as price stays below that and without a support level here, that's where I say price will go back and test those March areas. If we take a look at the Russell 2000, similar to the Dow, this formed a 3 drive to a top pattern. Price below Stevie's red line. Again, no areas of support, no breakout levels of support. And the reasoning for saying that in the case of the Russell 2000 and the Dow, they head back to their March areas. Now, the last pattern, the last indice to top, Tom, was the NDX 100. And just like the Russell 2000, it also generated a 3 drive to a top pattern, something I'm sure that Larry will teach in his upcoming a workshop. I think it's next week or the week after. And here, when we take a look at the NDX 100, folks, what I'll be paying attention to is the NQ, because if the NQ, the NASDAQ futures contract, if it closes below 87.14, that's going to give us a confirmed change in trend. And here we take a look at the NDX 100 pulling back to the 77.63 area. So in our last 30 seconds out here, let's look at the other patterns. And all this is actually fitting right into our seasonal cycle, which typically we see a top around May 19th. Now, we use this as just a general guideline out here with markets moving down into the end of June. But with regard to the rest of the markets, Tom, we've got a Gartley sell in the Dow transports. We have a Gartley sell in the semiconductor index. We've got a 3 drive to a top in the NASDAQ composite. The Wilshire 5000 a Gartley sell. The New York Stock Exchange a Gartley sell. We've got Gartley sell patterns all over the place.
That's a market in harmony, folks. That's the bottom line. Folks, really easy to get Steve's newsletter. Come over to our website at TFNN. You go into newsletters, you can see Mastering Probability. Check it out. It all comes with a 30-day money-back guarantee. Everything to win, 0 to lose. Steve, thanks so much, man. You have a great one, safe one. We look forward to the show tomorrow.
You bet, Tom. Thank you.
Stay right there, folks. Come right back. Dow's up 282, NASDAQ's down 233, S&Ps are up 63. We'll come right back.